Okay, everybody, it is me, Gregory Mannarino. It is Sunday, September 12th, 2021, and this is, of course, going to be my lovely Markets A Look Ahead segment. Let's talk, you and me. There is so much going on. It's frankly insane. I think we all know that. But let's start off with this. As those of you that follow this blog are well aware of, we have been hearing over the past several months, literally, call after call after call from major banks and major investors, Warren Buffett being one of them, for this market to take a big hit immediately, like now through October. In January of this year, just for an example, we heard from Warren Buffett, probably the most famous investor, or the most well-known investor in the world. In January, he said specifically, stock market valuations were out of control. And according to his indicator, this market could suffer a big drop, immediately. Well, that never happened. Okay. And subsequently, we've heard Wall Street Bank after Wall Street Bank after Wall Street Bank making the same claim. Okay. If you would have been listening to these people this year, you would have missed out on a significant rally. We have had record high after record high after record high. And we know the driver here. To me, when I look at this market, and I tell you this all the time, it doesn't make sense anymore. Nothing makes sense. Technical indicators don't matter. Forward guidance doesn't matter. Fundamentals don't matter. Nothing matters anymore when you have a central bank or central banks around the world here continuing to issue debt, and you have a government, quote unquote, government, calling for trillions of dollars in more debt. Look, the United States, if you live here in the United States, welcome to the most indebted nation in the history of the world. And these our so-called, representatives are spending cash as if we are the most prosperous nation on earth. Nothing could be further from the truth. We have a hyper debt bubble, and every mechanism that you can dream about, think about, and things you can't even come up with are going to be put forth to continue to borrow and borrow more and borrow more. I told all of you from over a decade ago that mechanism would be in place. That, again, is literally what I just said. Things you can't dream about, things you can't think about, because it's so outrageous, are going to be used as a mechanism to borrow cash from the future. And that mechanism must be maintained. It has to be. Our so-called representatives are going to throw cash at insolvent companies, industries, whatever they got to do. And see, because they can't allow you to know what really is going on here. So they are well aware of it. Every single one of our representatives is more than aware that the debt-based economic model demands that cash be pulled from the future in greater and greater and greater amounts just to sustain where we are, or the illusion that things are okay here. Look what they did. And I keep going back to this. They shut down the economy. They closed it off. And the stock market continued to go higher. As small businesses here in the United States were wiped out to the tune of about 60%. Great Depression levels of unemployment. A manifestation of a two-tier society in our face. The stock market keeps going up. And today, we are facing the specter of inflation surging at its fastest pace ever. And the stock market keeps shrugging everything off. It doesn't matter. Again, nothing makes sense. So what's the takeaway from all of this? It's pretty simple to me. And I've said this before, and I'll continue to do that. When I hear more and more and more calls for a market drop, well, I believe the opposite's going to happen. I believe the market will go higher. Okay, the crowd, in this case, even look, the Wall Street banks, they have their own agenda here. What they're really trying to pull off with all these warnings, I really don't know, because I don't believe that they are sending out letters to their clients saying, oh, you need to get out of the market. Oh, you need to sell stocks. I don't think they're doing that. Okay. In fact, I know they're not doing that. So these warnings that are being propagated by the mainstream financial channels and by big investors like Warren Buffett, and he's not the only one either. I mean, there have been other, billionaire fund managers coming out here, warning on the market. Meanwhile, they're not explaining the drivers here. And the drivers of the market, you know what they are. If you've been following this blog, it's the 10-year yield or the debt market. It's the dollar, it's crude oil, and the Fed's balance sheet. And it's the debt market that's the key to this, and you know it. So you can't look at, let's say, for example, Warren Buffett came out last week warning again about stock market valuations. They're overvalued. Okay, just because an asset, any asset, is overvalued, even massively overvalued, and I've been telling you that the stock market is, in la-la land with regard to valuations for the longest time, doesn't mean it's going to immediately correct. As a matter of fact, that's bullish in the near term. When an asset is overvalued or over-owned, okay, it's generally bullish for the short term. Eventually, and no one can point a finger and say, this is the time, this is the day, this is the month, when it's impossible to do. It's impossible to do. The only entity out here that could do that would be the Federal Reserve. If the Federal Reserve would actually stop buying assets, and I mean stop, okay? Even if we got a so-called taper, which isn't going to happen anytime soon, that does not mean that the Fed is going to stop buying assets. The Fed is buying assets here like we've never seen before in the history of the world, okay? And that mechanism is not going to just end, okay? And I told you, and mark my words on this, people, how this is going to play out. The Fed is going to eventually, and I don't know when this is going to be, they're going to nudge that federal funds rate higher, the overnight lending rate between institutions. When that happens, I believe sincerely the market's going to love it. I really believe that, especially the financial sector. It's going to love that. And that is the potential to push the stock market higher. With regard to a taper, it's the market realizes it's not going to happen, and you can see it. You can see this for yourself if you just look at the 10-year yield. Why do I always talk about the 10-year yield? If you're new here, let me just elaborate on that. The 10-year yield is the benchmark. It's what everybody watches, okay? You should keep track of the entire yield curve for sure, but the 10-year yield is the one me and, all the stock market players keep their eyes on. You understand? And then, of course, there's the dollar index or the Dixie. And again, people, the Dixie or the dollar index is not a standalone index. It's relative value, the dollar relative value compared to other currencies. Okay, so I want you to get that through your head because I keep hearing from people about it. And crude oil being the lifeblood of the military-industrial complex, they're going to continue to prop it up. So just keep that in the back of your mind. And the Fed's balance sheet is going to continue to expand. Even if they were to cut back on actually buying assets, issuing debt through one door, buying it back through another door, mortgage-backed securities, treasuries, and everything. The Fed has a trading desk. I think you all know that by now. If you don't believe me, look it up. Does the New York Fed have a trading desk? Yeah. They have a trading desk. What do you think they do with it? Sit in front of it and play games on it? Yeah, I guess they are playing games on it. But it's way, way bigger than that. Anyway, with regard to this market looking ahead here, okay, what do we got? We have, again, a market in la-la land. Yes, it is massively overvalued. We have call after call after call for this market to take a hit, which tells me it's probably going higher. Okay, of course, we're going to fluctuate. Of course, it's a random walk with an upward drift. Of course, we can still get a normal correction. Maybe we don't get them anymore, but it's possible. It's possible 5, 10, 15% correction in the market. That's how markets go higher. Okay, markets go up, 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 up. We get a normal correction or a pullback. We establish a new floor, and they go up. That's what they do. Okay, now with regard to other assets, they trade the same way. Some are much more volatile than others, and I'm referring to cryptocurrencies, which are the most crazy, assets to be in and follow, because they are volatile, like to the nth degree. This is why this space is not for everybody. And with regard to precious metals, people, I know how frustrated you are, realizing, and I know you do, just look it up for yourself. The rigging of the metals markets, we know who's doing it. We know why they're doing it. It's not going to stop. It's not going to stop until it does. Just like the stock market is going to continue higher until it doesn't. It's going to continue higher as long as that 10-year yield remains stable, the dollar remains relatively weak. Okay, you got crude oil staying propped up and the Fed's balance sheet ballooning. But we're on top of it. And that's why you and I are kind of diversified. This is what I've been explaining for the longest time. You should be in this market owning large cap stocks that pay dividends. If you're a trader, I mean, it's a no-brainer here because I set it up for you. I tell you how to trade the market, what assets you should be looking at. Everything is right on my website for you, traderschoice.net. I hope you're following that. I'm really working hard to keep you on the right side of this with regard to, metals and cryptocurrencies and other things too. Anyway, I think you got the big picture here. You understand what's going on. You really are way ahead of the curve if you're following this blog, even if you've been following it for just 6 months. Some of you have been with me for years, and I appreciate all of you so much. I really do. And I won't let you down. So as long as you continue to follow this blog, listen to what I'm saying, ignore a lot of the crap, and realize the mechanism also goes beyond that. You have the propaganda ministry, our politicians, the mainstream financial channels. Look here, don't look over here. Trying to convince you that what you're seeing is not real. And nothing makes sense. Nothing is what it seems anymore. You're wondering why they're actually borrowing money, why they're talking about the X amount of $1 trillion to be created out of thin air. It's the mechanism that we must borrow to keep the debt-based system alive. Once we stop borrowing a single dollar, one, from the future, the entire mechanism collapses. You're not supposed to know that. You're not allowed to know that. The debt-based economic model machine is the most hideous mechanism that has ever been created in the history of the world, and it demands a constant inflow of debt. All right, our politicians are brain dead, zombified, Frankenstein, Bidenstein president cannot tell you this. He's not allowed to explain. None of them are. None of them are. The last guy talking about devaluing the dollar, it's too strong. Continuing to have the Fed pump the market. The same thing with Obama. They can't tell you these things, but that's the mechanism. It must continually be fueled. Pull cash from the future. Pull it from the future just to maintain where we are. People, the whole system could be brought down in a nanosecond if we just would disallow a single dollar, one, to be borrowed from the future. It can't happen. So expect more of this mechanism here. And expect the economy to contract faster than it is already as a percentage of GDP. Our economy is contracting It's in free fall. You all know that. All right, look, very long video. I'm going to cut it off because I could sit here and talk for hours. Anyway, look, I'll see you all in the morning. We're going to stay on top of this market. As always, this guy loves you a lot. Please share the video and please check out my website. Look what's there for you. Okay, there's a link in the description of this video. All kinds of free stuff for you. A chat room, charts. You can follow the dollar index or the Dixie, crude oil, 10-year yield, all there. You don't have to look anywhere else, and I've set it up for you. All right, I'm out of here. See you in the morning.